Topic A tonight, a bunch of unknown unknowns, to use Donald Rumsfeld's phrase. That's the big story behind today's 2% across-the-board market plunge. We're going to try to analyze all of those unknowns this evening. The Spanish credit downgrade, China's trade deficit, U.S. jobs and trade, the Saudi day of rage, Libya. Everything is unknown. Well, what we do know is the Dow dropped 228 points. We also know that a $2 drop in oil did not rescue the stock market. Two positives in the midst of today's gloom. First, a new government report shows that corporate profits, the mother's milk of stocks, reached new all-time record highs. Second, the trade deficit the U.S. registered in January was actually a sign of economic strength, not weakness. But the energy shock is still a huge tax on the U.S. economy, and the Fed is monetizing that energy shock into higher inflation. So I just want to be realistic. There are unknown unknowns out there. That is the message of today's sell-off. Let's bring in our panel, and maybe they can clear it all up. We welcome back Ed Yardini, president of Yardini Research, CNBC contributor Keith McCullough, CEO of Hedgeye Risk Management, and Lee Munson, chief investment officer at Portfolio Asset Management. Lee Munson, I want to start with you, because when you get away from all the details, the China trade gap, our trade gap, jobless claims, Spain, whatever, what you're asking, I think, is the health of China, the USA, and Europe. And I want to know, has that assessment been seriously downgraded by today's stock market plunge? I ask you, Lee Munson.
No, I just think that we have to clarify to the American public that if they want to make money, they can't just go out willy-nilly and just, quote unquote, buy on the dip. You have to look for shallow pullbacks in places where you have strong growth, the U.S. being a prime example. Now, I don't want to touch Europe. I've talked about that, Larry. I think Europe's in a serious problem with the cost of Brent crude. However, I think that, all things being the same, I think China is mediocre. I think it's going to limp along. But when you have a pullback, today I'm buying the NASDAQ. I'm buying the S&P 500. But I want to make a distinction. We're no longer, like we were last week, looking to short treasuries or go long something like TBT, because right now that may look like a buy on the dip. Energy may look like a buy on the dip, but energy could come down more. It could go up more. Stay away from the unknown unknowns. But what I would tell people, 2% is not all across the board. You look at energy, and it was hit a lot harder. So I think you have to be, go for the core positions, Larry.
Well, Ed Yardini, let me ask you. Let's throw in also, besides the issues of the Chinese trade deficit, which some dismiss as just bad adjustments for their Lunar New Year's factory exports shut down. I thought our trade gap actually showed a lot of strength in there in terms of what we're importing. You may disagree. I want to ask you, though, how does the Saudi day of rage factor into this? In some sense, that might be the greatest unknown of all the unknowns, and we had some bad reports that the Saudi troops were firing on the protesters. Eddie, how do you see it?
Well, the reports are sort of mixed. There was some talk about using non-lethal force, but look, the fact of the matter is that there's a day of rage now in Saudi Arabia, and there's another one scheduled for March 20th. And I don't think they're letting the reporters in, so we get a real good concept of what's going on there. Look, that's a society, that's a regime that's, I think, going to maintain a very tight control on the situation. So while it would be nice to imagine that peace, harmony, and democracy can come to all the countries of the Middle East, there's still a lot of autocratic regimes that are in firm control, and one of them is Saudi Arabia. For us in the rest of the world, it probably means that the Saudi oil will continue to flow.
Before I get to Keith, Ed, one follow-up. Do you think the world price of oil is going up or down right now?
Well, it's like one of these known unknowns, but so you sort of have to take sides here. I think there's plenty of oil around. I think the Saudis, the Kuwaitis, other OPEC countries are going to do everything they can to offset any shortfall occurring from Libya or anywhere else. And I think they do have the capacity to do it. So I'm basically assuming the price of oil is going to stabilize at $100 per barrel. All
right, Keith McCullough, I don't know if you agree with that, Yardini. And Keith, I want to ask you, given the market action, very bad today, it's getting sloppier and sloppier. The correction is upon us. There's no two ways about that. Is your assessment significantly downgrading China, USA, and European economic growth? And maybe I should be fair and throw in the emerging world as well. Do you see a significant downturn in growth, Keith? I think that's one of the key questions to ask after a day like today.
Yeah, I think, first of all, you asked the question properly in assessing global growth, because that's a very critical part of how we look at the model. We've been very bearish on Asian growth for 3 months. I think if you took today's news on China as new news, you haven't been paying attention. So clearly, Asian growth has been slowing. The Koreans raised interest rates today. The Japanese revised their GDP growth down again, and it's already a negative number to begin with. But the second part, which I think is the better debate, and it hinges basically on what you asked Ed, which is where does the oil price go, is on U.S. growth. Because U.S. growth really hinges on U.S. consumption, and U.S. consumption, I believe, hinges on the price of oil. If you look at the fourth quarter average price, retail gasoline price, it was $2.94 at the pump. That's running $3.60 at the pump now, Larry, and I think that that's a huge headwind for growth in this economy.
You know, Lee Munson, let me just add, Peter Butel, a seasoned, well-regarded oil analyst, is sending me the following. He says the hike in energy prices, both oil and gasoline at the pump, Lee, since last August, from early September on, that's about, what, 6 months? He says it's $182 billion annual rate of tax on motorists, and he says all in, if you include diesel, heating fuel, jet fuel, and other parts of the energy story, that actually the total cost is now about $330 billion tax hike on the American economy. Lee Munson, do you agree with that tax hike analysis? And is that, in fact, one of the unknown unknowns that's going to slow things down substantially?
Geez, Larry, you're always hassling me about my opinion about how people shouldn't talk about it as a tax. Now, I'll give you this. I will say that it's going to drag on earnings. I'm not as optimistic that earnings for corporate America, especially in the transportation, some material sector, are not going to be dragged down a little bit by this. But my clients aren't worried if gas is up $1. And we never want to talk about those textbooks I talk about, Bernie, the economic stuff. I was just shredding a syllabus last night. And one thing I liked about it, and I kept it out of the shredder, was that it talked about the substitution effect. We assume that, and I know that analysts, I understand the idea of a tax, but I would say, really, if gas is going up, we will substitute. Now, is it shocking? Yes. And that's where the fear is. That's why you have an opportunity to buy the broader indexes now. But if porterhouse steaks are $100 a pound, buy some chicken. I mean, we really can't make those decisions on our own.
If you say substitute for gas, look, I agree on the substitution effect. If steak is too high, you buy chicken. Okay, I buy that completely. But regarding gasoline, basically you have two options, don't you, nowadays? You either buy gasoline and drive, or you don't drive. And I guess the question is, if you drive less, does the economy slow down? That's all I'm asking. I'm looking at it very simple. It's a binary choice, Lee Munson.
No. You're trying to trick me into that. I'm not going to do the binary choice. I think people are going to say, listen, we saw this before when we saw big tax hikes. We saw how this happened during, short spikes like Katrina and different things like that. Think about how many people buy things on Amazon.com. Now, again, we're getting into the anecdotal concepts, and you're trying to bring the big macroeconomic idea of $300 billion in tax. I would say there's $300 billion of money there that can see innovation and can see some type of substitution. Yes, I understand that we have to drive, and that's going to take more of people's money. But I believe in the American public is going to innovate and figure out other ways to spend their money.
All right, I love
it might have wide effects.
The American public is very smart. But Ed Yardini,
then don't tell them there's going to be a tax.
Ed Yardini, on the bullish side, I've never seen a serious, not a correction. Corrections come and go and can be very healthy in the stock market. But Ed, when you have a positively sloped yield curve and ultra easy money from the Fed, when you have rising profits, and actually for the moment we have relatively low tax rates for the next year or two, Eddie. I don't see a calamity. Jane, I'm taking exception to Keith McCullough's bearishness. Can you answer him?
Larry, this is the third year of a 4-year presidential term, and this is a year that tends to generate some very strong earnings gains for the market. On average, over the past 14 third years of the terms, we've had an 18% average increase. And so far, until today anyways, this market was tracing out the average of all those almost perfectly. The average hits 1485 by the end of the year. Now, at the end of last year, we did see the political forces, the Democrats and the Republicans, get together and do everything they can to stimulate the economy this year. They cut the payroll tax by 2 percentage points. They allowed allowed for 100% depreciation for capital. And meanwhile, corporate profits are strong. And, when corporate profits are strong, companies expand, they hire. And I think that'll be a very, very important offset to the tax hike you're talking about.
And Keith McCullough, I don't know what's going to happen in Saudi Arabia. It is an unknown. We're going to have a segment about it in a couple minutes, but even the experts don't know. But here's what I know. There is a major taxpayer revolt going on in this country. You see it in Wisconsin and Ohio and Florida and New Jersey. You're seeing it at the federal level. Taxpayers want governments to stop spending and return the money in form of lower tax rates. To me, this massive, epic battle is the most optimistic turning point thing I've seen in at least 30 years, Keith. The outcome of this is going to be totally bullish. Now, you may disagree, and I'm going to give you an opportunity to disagree right now.
I don't disagree with that. I think if you watch somebody like Paul Ryan, you get a real sobriety check. But at the same time, Larry, at the close today, or into the close, you had to look at what Congress is doing in the meantime. $223 billion. They just hit a new deficit record today. So they're saying one thing, they're doing another, and the market's getting very, very worried about it, as they should be.
Yeah, I think what could be very interesting is that a lot of the fiscal conservatives that are basically doing their thing now at the state level. There are a lot of Republican governors that are really lunging in to really deal with their state problems. In New York, we've got a Democratic governor, and I think a lot of these governors actually want to run for president.
Andrew Cuomo's doing it, man. He's doing it. I give him all the credit in the world.
Absolutely.
Hey, Yardini, will you buy this correction? I got to get out real fast. Will you buy this correction?
I think it's a correction. I think when the price of oil settles and people perceive that it settles at 100 and isn't going to 150, which is my working assumption, I think the market's going to do better.
Gentlemen, real fast, help me out. Lee Munson, will you buy this correction?
I bought it today. I'm long the NASDAQ. I'm long the S&P. I'm waiting to try to accumulate copper and grain at a little bit cheaper prices. No interest in the short Treasury trade.
All right,
I've got
thank
real
you.
trades to
Keith
do.
McCullough, you get the last word. Will you buy or sell this correction?
I covered some shorts in emerging markets today, and I bought oil.
Wow. All right. Thank you, gentlemen. You're all great.